All right, guys. Well, it is a beautiful day out here, and the sun is finally out. I know we've had some rain the last couple days, but that's fine. We've needed the rain. The sun's back out now, so I thought I'd take a walk. And right now, we are talking about small caps once again. I wanted to make one more video on small caps because I made a video on the ETFs, and I even talked about how you can take one of the ETFs and narrow it down into, let's say, the top 5 holdings for the ETF and see what the weightings are. You can also look it up on Google if you want. You can just go on Google and find, what your holdings are, what you want to look for. But either way you decide to do it, that's just one example of the many tools we offer. A lot of the tools are free as well. You can check them out on dailyinvestmentadvice.com. We're migrating the website over soon. 3.0. This is 3.0 because we have launched this a couple times now and we've relaunched. And so I thank you for everybody's support up to this point. But small cap stocks, how can we get invested into these companies that, let's just say, are under $5 billion, especially with inflation? I think it used to be $2 billion, but now I think small caps probably fit in the category, you could say, of $5 billion or less. So you first want to you can look at stock screeners. I've mentioned the fact that we have OTC markets, or over-the-counter markets, stock screener. Now that would specifically be for stocks that trade not on national exchanges, but you can also look through on that website and find stocks that do in fact trade on national exchanges. So if you're looking for specific OTC stocks though on specific markets, you can narrow it down with that stock screener, and I'll leave that link down below as well. So you can take a look at narrowing down a lot of small cap opportunities. There's a lot of filters you can use on that, and perhaps I should make a separate video for those of you guys interested in terms of how you can actually do that. And just narrow down all the search results and everything else. Probably would not be a bad idea. But with that being said, we have small cap stocks less than $5 billion. Let's narrow down a search filter and find those stocks. Maybe they don't trade on the NASDAQ, but they trade on the OTC markets. Because if that's the case, we might be looking at $100 million or less. The market capitalizations are a lot less on the over-the-counter markets. A lot of the times due to the fact that you don't have the market makers, you don't have the liquidity providers that you do on the major exchanges, and so the market valuations overall can be a lot smaller. So that is one consideration. Now, the other consideration with small cap stocks and the overall liquidity, even on the NASDAQ or on the New York Stock Exchange, if they trade under the Russell 2000, for example, and you have some of the top names that maybe traded on the NASDAQ and have a lot of liquidity, especially as you have ETFs that funnel these stocks in and out quite often. You have buy and sell liquidity pretty much anywhere you go with a lot of these top names. But if you're not one of the top names, then maybe you are less in liquidity and it's harder to buy and sell. So these are considerations and, just things to remember when you're buying and selling these types of stocks, especially if you're considering adding more considerable types of position sizing. If you're thinking about your price and your specific entry point and what you want to try to do, you could always try like a cash secured put against one of these small cap stocks if you agree to buy at a certain price and get paid the income for taking the risk. That's an option. But you could also, no pun intended, right? But you could also take that and you could just buy the stock outright at the market price, or you could set a limit price and you could say, I want to buy it when it gets to this price. But I think, the cash secured put, if it's a possibility, is not a bad way because you can buy at a discount, and worst case, you can still get paid for buying the stock. And there's no commissions at all. So that's one of my favorite strategies. But anyway, guys, this is all about small cap stocks. How can you find small cap stocks to invest in? Because we've talked about the ETFs. If you watched my last video, we talked about 5 different exchange traded funds for the small cap space and how you can get invested into these ETFs. And what I've mentioned and what I'm going to continue to mention is the fact that small cap stocks are sold off relative to the rest of the market. Like they're undervalued is what I mean. If you look at the NASDAQ, if you look at the S&P 500, these things have been trading sideways and they're just now breaking out to the previous highs. And a lot of these ETFs have not seen these highs since, if you look at like 2021, when small caps really took a big, you could say things went well for small caps back then. But now we're kind of approaching this cycle, I feel like, again, where they're going to break out again. And not just small caps, but micro caps. We're talking less than 100 million. When I mentioned the OTC markets, that's a micro cap stock, something that's very tiny and can really go up substantially with the right type of liquidity. And that's what you need, is you need interest rates. You need higher liquidity in these high risk assets. And that's what's going to get your big moves, especially in microcaps, where one piece of news that comes out can send in excess liquidity that sends that stock flying off the charts. And that's how you often get 1,000 or 2,000% moves overnight. That stuff does happen. So keep an eye on that type of stuff. Maybe you're invested in a stock that does an overnight, big return. Would you sell? I would recommend selling, yes. But some people might say, well, it could go up more. You just have to kind of read what's happening around you and make your decision. So that's the question. Now, those are on the very high risk spectrum though. You're talking low liquidity, high volatility, and you're talking basically an OTC market that is like the Wild West of the stock market. Now, you could also argue that cryptocurrencies are like the Wild West. And in fact, I would argue that even though there's more regulation with cryptocurrencies, there's also more regulation with the OTC market. And there is a sense of legitimacy that has occurred in the last few years, I would say, with the over-the-counter markets. And so that's just one consideration. But also, just think about your risk tolerance as an investor. Just a reminder, guys, we are not registered. I used to work in the financial services industry. I have my finance degree. I have my MBA. I've studied a lot of finance and accounting courses. But just because I previously worked in the industry with my registered representative Series 7 license does not mean I'm your financial advisor, right? So keep that in mind. Always remember that it's based upon your risk tolerance and your investing goals, and think about what that is and how it can benefit you. Or, if you're not interested, just think about what that might mean for you as an investor, because it might not mean doing what we talk about in this video. You might not feel comfortable based upon your risk tolerance and investing goals, and that's perfectly fine. So small cap stocks though, back to it. The high risk spectrum, high volatility, low liquidity, big moves in a short period, 1,000% upwards, downwards, 90%, 95%, 98% intervals. 99% is a total catastrophic loss. I've experienced that from the peaks of 45 cents down, from a six-figure profit down to nothing. You owe the IRS money. You don't have the money because your portfolio has shrunk, even though you've booked a six-figure profit. It's crazy, right? But you've already spent all the money's gone, you lost a job or whatever, something happened. Anyway, long story short, that's how you can get yourself into trouble. And even if you make profits like in a taxable account on these small caps, you have to remember that any kind of short-term gains are less than 1 year. Long-term gains, 1 year and beyond. So if you have, let's say, a stock for 1 year and 1 day, you're good. Long-term gains are the way to go if you do have any big profits. The problem I had was I had a lot of short-term gains, and they were all over $100,000 combined. So I had basically taxable income that year of the most I'd ever made when I was 26 years old, nearly $200,000, $180,000 or something crazy. I owed the state of Illinois and the federal government a lot of money. So it was not fun, right? But it was fun at the same time. I enjoyed myself, but it was a lot of taxes, and that's just part of the game. So I had to sign up for a payment plan and all that because, some of that, I wanted to retain the money. I put it back in my Roth IRA and stuff, and I still have a lot of that money invested. But the problem is that when you make that kind of money, the tax man wants his share. So I did not want to pay like $30,000 plus in taxes, which is what I owed. So I signed up for a payment plan, and I'm just now getting to the finish line with that. But that's another consideration, is when you invest in these small cap stocks and you actually do end up making money, guys, the tax man wants his cut. So if you want to minimize the tax man, even though you're going to pay the tax man when you take it out of the Roth IRA, if you take it out early, that is, if you wait till you're 59 and a half, you won't owe any taxes. But if you do decide to take it out early, it's a 10% penalty plus whatever income taxes. So in the meantime, though, if you put it in a Roth IRA, when you sell, you get to reinvest 100% of that money. So if you don't need the money right now, put it into a Roth IRA. You can always also withdraw any kind of contributions. So if you make $300 to $400 a month in contributions, then that account can withdraw that much penalty and tax-free, and it won't be counted against you for that reason. So that's another thing to consider here when it comes to Roth IRA. I think even Roth 401k contributions. I have a Roth 401k through my employer, for example, and that's just something else to keep in mind. So with that being said, thanks so much for tuning in. These are some considerations with small cap stocks, micro cap stocks. On the micro cap spectrum, you're going to get high volatility, low liquidity. You're going to be able to make a lot of money quickly. We've talked about those stocks, but you're also going to have a very high degree of risk. So that's why you have the potential to see like a jackpot type return with those stocks, because of the fact that your risk curve is so high. Now with the small caps, even like 1 billion or less, your risk curve is still very high. If you're on the NASDAQ, for example, you still have risk from potentially short sellers and people who might want to benefit from, you know, your demise on the other side of the trade. So there is stuff that happens like that, and there is, you know, there are short raids that happen on the major exchanges. And so these are considerations that you must, you know, keep in mind, because not everything is sunshine and rainbows, even if you're on a major exchange. It can be very vicious, very cutthroat. There's two sides to the trade. You have large firms that can short things down. We've seen it happen before. These things are like risk in the market. So with that being said, small cap stocks, 1 billion or less. Once you get to 1 or 5 billion, hopefully you're in that range where they're starting to generate some pretty good revenue, some pretty good numbers. If they're generating 100 million plus in revenue, for example, and they're valued at 1 billion plus, then that means there's a 10x multiple on their revenue. So how fast are they growing the revenue is a question I would ask in terms of evaluation. And also, you know, if they're 500 million plus in revenue, let's say, and they're valued at 250 million, then maybe they're undervalued. That's a price to sales ratio of 0.5. Price to sales of 0.5 could arguably be undervalued. You know, price to equity, return on assets, all those numbers you can run. And you can do that on Daily Investment Advice. A lot of those calculators we have for free. I'll try to remember to leave them in the link down below in the description. But this has been a video on small caps, guys. Thanks for hanging in there with me. Hope you guys enjoyed the view. It's a beautiful day out here, so I thought I'd make a nice video and upload it for you guys on the whim here. So thanks so much once again, and we will see you all in the next one. Take care.